So that started my journey into Bitcoin. I first bought it in 2013. I wrote the first macro strategy paper on Bitcoin in 2013, where I looked at the stock to flow. I didn't know it was called stock to flow then, but I looked at the stock to flow of Bitcoin versus gold and concluded that with gold at $1,300 at the time, Bitcoin was worth, on an equivalent basis, about $1 million. I thought, well, that's a hell of a risk reward because Bitcoin was $200. So I thought, even if I'm a total idiot and I'm 90% wrong, it's still worth $100,000 and it's only at $200. So that's when I first bought it, got involved in it, held it all the way through the bear market, through the bull market 2017, sold out too early as the forking wars were taking off. And I got confused thinking, I don't really understand all of this. So I took profits, got out. And then even when we started Real Vision, I think the very first video in 2014 had Bitcoin in it. And then, my interest in the whole space exploded. I knew that when we get to the next recession, macro and crypto were going to meet. And that came in 2020. And that was the signal I'd been looking for. And that's when I kind of went irresponsibly long. Crypto put 100% of my liquid net worth into it and then broadened out into the space. It has long been known that we talk about the madness of crowds, but actually crowd-based forecasting tends to do better, which is one of the reasons why the S&P 500, only one of the reasons, outperforms other things. It's quite difficult to beat benchmarks because actually millions of investment decisions by millions of people actually produces quite decent returns if people are focused on it. There's a great book called Forecasters that looks into this in more detail. And can you improve performance by giving the crowd certain elements and tools of knowledge, or curating the crowd to do even better?
How and to what extent has the perception towards crypto changed, and how much further is there to go?
I think almost everybody in finance now understands there's something very big going on, and there's a general panic to get out of finance and into this new world. I mean, I get hit up by, everybody from partners of Goldman to asset managers to everybody saying, how do we move to this world? So I think the force is unstoppable. It's the time that's unknowable. But as we know with exponential trends, they always feel slow, and then you look back and suddenly everything has moved. If you think of the exponentiality of what's happened in the digital asset market since, I went irresponsibly long back in, April, March 2020, right? That was a Bitcoin only world. Yes, other people were involved in other stuff, but then NFTs, DeFi, social tokens, DAOs exploded. This had all been around, and they were like, no growth, like this. And that's what's happening here. I've spoken to the biggest private equity firms in the world, the biggest asset management firms, the biggest banks, everybody. I've given presentations, endless presentations to, investment committees, boards, everybody about all of this stuff.
Do you think the recent volatility, downturn in prices, changes, any of that are at this point everybody's past worrying about that?
I think everyone now realizes it's a feature and not a bug, that you don't get exponential upside without high volatility. That's how risk reward works. And the question is do you get compensated for the risk with the reward? And a 50% pullback versus the multiple 100% upsides you get over periods of time shows that time and time again it is well compensated for. So I see no change at all in the number of queries and who I'm presenting to about this. I don't think any of these big investors even care about this volatility, because they need a volatile asset as well in this world, because bonds and other stuff are just non-volatile assets and they can't generate returns, and they've got pensioners who need to reach a hurdle rate and they ain't going to do it in bonds. So they have to take risk. They understand that. And also they're learning that there is more alpha in this space than there is in traditional markets because there's less capital in it. I mean, I don't know, it's probably a trade secret, but it'd be very interesting to go and ask your trading floor the returns of the crypto traders versus traditional markets traders. In various strategies.
Right. Yeah.
My guess is crypto has a lot more alpha for a similar unit of risk.
Yeah.
And also think about the sheer number of tokens, protocols, all of this stuff that's going to get even harder when it comes to social tokens and sports teams and pop stars and brands get involved. Now we've got NFTs, hundreds of thousands of these things, right? So you've got an exponential growing number of assets. The capital going to the space is not exponentially growing to catch up with it. The complexity of the products like DeFi is going exponential. So all that looks to me like is that's alpha everywhere, all over that ecosystem. And the capital cannot grow fast enough to arbitrage away the alpha. That's why this whole thing is what we're talking about, is because that is why the magic is there. And that's why, going back to where we started this conversation, tokenizing asset management in its various guises, whether it's centralized, decentralized, individual traders, pools of funds, DAO structures, that makes total sense in a world where the number of opportunities is going exponential. You need to scale. I mean, you're simply not going to scale a hedge fund strategy like Millennium or somebody of that sort in the traditional world to manage crypto. You have to think differently. You're going to have to think broader, and you're going to have to think further out the risk curve and where you're sourcing your returns in terms of the kinds of traders you go to. So, it really is a revolution going on, and it's super exciting. And I think a lot of people, even listening to this, haven't really yet figured out how big this is and how much is about to change, but everything is going to change. What I think about investing, I'm sure you do too, is the best thing is when you've got the wind in your sails behind you, when you've got the secular trend and it's at the point where it's curving upwards. When that happens and you invest within a space, so let's say this kind of decentralized asset management area, well, with that tailwind behind you, your probability of success is going to be extremely high compared to, let's say, investing in banks where you've got headwinds. So it's the obvious thing of secular investing in an exponential trend. People get freaked out by where we are now. Where's regulation now? Where's the adoption now? Where's the big fund that's formed this way now? The point is, you need to live in the future and see where it's going.